In the past few decades, China has had a real economic miracle. With growth rates close to 10% a year, it's become one of the largest economies in the world. But unfortunately, China now faces many challenges and problems, which could cause a reversal of this economic miracle. So first of all, in the short term, China is struggling to deal with COVID. The government in China has wanted to have a zero COVID approach, but with the new Omicron variants, this has become impossible to achieve. So whilst many Western economies have given up on lockdowns, China is still trying to achieve this unattainable goal. And unfortunately, the Chinese government is unwilling to admit that it's got it wrong. It likes to prove that it's better than the Western countries, and it wanted to prove that it can control COVID unlike in the West. But it's a bit of a losing battle, and the lockdowns are reducing output and causing a big loss in business and consumer confidence. But they're not able to attain zero COVID because it's just virtually impossible with the current variants. So the last quarter of growth was only 0.4%, which for China is very low. And already we're seeing record levels of youth unemployment. In urban areas, the unemployment rate for young people is close to 18%. Now, COVID is a short-term problem, but a bigger long-term challenge is the aging population that China will be seeing very soon. China had one of the highest population growth rates in the world, and because the government were worried about this, they introduced the controversial one-child family. And this was very successful in reducing population in China, but unfortunately it's gone too far the other way, and China now has one of the lowest birth rates in the world, with about 1.15 children per woman. And also China has a very skewed population. The one-child family policy has led to much more men than women, and in China men outnumber women by about 120 to 100, and this was because families had a preference for men. But it means that it's going to be very difficult to reverse the low birth rates, and forecasts suggest that the number of old people as a percentage of the population is going to rise very dramatically over the coming decades. At the current time, there are 20 people over 65 for every 100 workers. But by 2100, the number of people over 65 is going to rise to 120 for every 100 workers. So this is going to have a very big impact on China's economy. First of all, an aging population tends to lead to lower investment and lower growth. Japan has one of the fastest aging populations in the world, quite close to China. And since Japan's population started to age, we saw much lower growth in Japan, lower investment, a stagnating economy. And this is because firms have less incentive to invest in new shopping centres and new business when young people aren't there to spend. Also, China's past economic success has been very dependent upon having a large supply of young workers being able to come into the factories and keep wages low. Despite high growth, there's been so many workers willing to move from rural areas that firms have been able to keep wages very competitive in international markets. And this is a big success behind China's export growth. But as the working age population starts to shrink, which it will do, this elastic supply of labour will change. And it might lead to higher wages, which is a good thing, but it might lead to a fall in competitiveness of China. But I think the biggest problem for China is that such a rapidly aging population will place great stress on healthcare, pensions, and there'll be a much smaller workforce to be able to provide the necessary taxation. And in fact, China already has a big problem in collecting taxation, but it needs to be able to deal with the aging population and all the demands that they place on healthcare. Another problem that the Chinese economy faces is that it's really in the middle of a real estate bubble. Housing accounts for 30% of GDP, which is pretty much where Spain was and the United States was just before their housing bubble burst. And the housing bubble has been caused by quite a few factors, such as a shortage of supply, but also a growth in credit and poor lending practices. And there's definitely an element of a bubble there, with house price to earnings ratios amongst the highest in the world. And if you look at big cities like Beijing and Shanghai, the house price to incomes ratios are astronomical and not sustainable in the long term. But because so much of the economy is based on real estate, if the housing market starts to turn, this will have a very serious knock-on effect, because firms investing in housing will lose money, and banks will have an awful lot of loans that they have to write off, because they will lose money as firms and consumers lose money on the housing market. And if banks lose money, then this will have knock-on effects for the whole financial system in China. And although people have been saying it for quite a few years, the level of house prices in China really does lend itself to a housing bubble very close to bursting, and that would have a very serious effect on the Chinese economy. Another issue worth mentioning is the geopolitical shift that has occurred since Russia's invasion of Ukraine. And I think the shocking thing for many in the West was how it has forced us to re-evaluate our dependence on global trade, especially with countries who may not be reliable politically. So, for example, many Western countries had invested in Russia quite heavily, assuming that everything would be fine. But the level of sanctions imposed after the invasion of Ukraine has caused many Western countries to pull out of Russia and pretty much lose everything. And now people are looking at China in a different light, because if we can impose sanctions on Russia, then how does this affect China? What would happen if China wanted to retake Taiwan? We may see a similar level of sanctions, and firms which were reliant on supply chains in China may feel that it's too risky, because China is not a democracy and we can't rely on geopolitical tensions not causing similar level of sanctions. So already Western companies are considering diversifying their supply chains out of China. Already we can see Western companies seeking to diversify their supply chains away from China to other Asian countries, or even closer to home in Europe and the United States. So this is not an immediate thing that will hit the Chinese economy, but it has definitely changed attitudes, and the attractiveness of investing in China or relying on Chinese exports and components is different now in 2022. Another issue worth mentioning is global warming. China, as one of the biggest economies in the world, is also one of the biggest emitters. It is already facing some consequences of global warming in its water supply, agriculture, forestry and power supply. So China kind of knows it needs to be aware of the problems of global warming, especially because so many of its big cities like Shanghai and Guangzhou are on the coast, and rising sea levels could place millions of Chinese at risk. Now, I've mentioned many problems facing the Chinese economy, but it's worth keeping a balanced mind about this, because the Chinese economy still has many strengths. Despite COVID lockdowns, the economy is still growing. Despite an aging population, there may be ways around it, as Chinese firms increasingly look to higher technology, not relying on cheap labour. And also the Chinese economy is starting to diversify. It's a sign of maturing, no longer relying almost exclusively on export sales, but with an increasingly strong service sector. Domestic consumption is rising. And China still has a long way to go to catch up with, say, European income per capita statistics. So there's still potential for very strong growth as China catches up. Also, whilst China has some problems like a power shortage, it has a tremendous capacity to think big in terms of investment. And you could argue this even perhaps is an advantage of not having a democracy. If you've got a strong central government, they just go ahead and invest billions and trillions of pounds in new railways, new transport links, and perhaps most impressively, the new energy sources like the offshore power program and solar power plants. And this is beyond the scale seen like anything in the West, because China is determined, I think, to be more energy independent. Perhaps as a consequence of the Russia-Ukraine war, it sees its reliance on fossil fuels as a potential problem. So China is using its huge foreign currency earnings and investing in some projects which will help very much in the long term. And in a way, they're doing a better job of this than, say, the United States, which has really struggled to invest satisfactorily in the long term. So it will be interesting to see what happens to the Chinese economy in the coming years. The real estate boom is definitely a big problem, and that could derail economic growth. And also the aging population is going to see a very different type of economy in the future. And they will definitely have to work out how to deal with such a rapidly aging population. Yet, despite these problems, the Chinese economy still does have some strengths. It's really transformed in the past few decades, and there's no reason why it can't continue to do that, but in different ways.